All investments carry risk, and that's why you get paid. Generally speaking, the higher the risk, the higher the return. You're looking to get a low price property where the rent covers the interest and then the depreciation gives you a little bit more back in tax. Can I buy an investment property if I don't have a job? Of course you can, but you might have to. Welcome to the Passive Property Investor Podcast, where I teach you how to stop trading your time for money with property investment. I'm Jerry Parker, your property investment consultant. Let's dive in. Hey, dudes, guys and gals, passive property investors, Jerry Parker back again with the Passive Property Investor Podcast. Glad you're here. We're going to play a game today. We've gone and asked Google, what are the most commonly asked questions about passive property investment? And we're going to go into them. But the last one is, what's the golden rule about property investment? We'll get to that one last. The first most common question asked into Google is, what is passive real estate investment? Well, passive is kind of the counter to active. And active would be doing splitter blocks, being a property developer, and having to take or renovation of a house. A passive investor focuses more on their assets, liabilities, equity, and debt to invest into passive properties that just bring them income. So they don't have to do a lot. Passive property investors are good for people who work a lot already. They already have a full-time job, and they don't want to have another full-time job managing and developing real estate. The second question from the Google survey of most commonly asked questions on Google is how to generate passive income with property. The passive income with property comes from rent and tax deduction. So you get the rental income coming in and you get a tax deduction. A lot of times it's from the depreciation off of a property that's coming back if you're in a high tax environment. And so you're looking to get a low price property where the rent covers the interest. Say if you borrowed 100%, the rent would cover the interest and then the depreciation gives you a little bit more back in tax. And that's how you get passive income. You can go borrow all the money and still get positive passive income as a passive investor. That's kind of what we're looking to do. The Google questionnaire number 3, what are the cons of passive real estate investment? I would say that you don't manufacture equity as fast as you would like in a property development or a refurbishment. You know, if you do a refurbishment, you can significantly increase the value of the property, but it takes you a while. Or if you do a land subdivision, you can increase the value much faster. But with a passive investing, we're using time in the market to make money for us rather than, manufacturing the income. Question number 4 from the Google question hierarchy, how can you make a living from property investment? Well, there's a lot of ways to make a living from property investment. You can be a property professional and, there's agents that make money through fees or advisors like myself who get money through fees. Or you buy properties that throw off their income and you live off the income of the properties. That's principally the way people make money from property investment is from the rental income. Okay, Google question number 5, how risky is passive investing? Well, all investments carry risk, and that's why you get paid, is because you're taking money from a lower risk environment to a higher risk environment that pays you higher income. There's rules around risk. Generally speaking, it's the higher the risk, the higher the return. So passive investing can be risky depending on how much debt you go into and what sort of location that you go into. If you go into areas that are closer to where people want to live, big infrastructure, there's low risk, but a lot of times higher price, so lower return, or the opposite. If you go further away, it's higher return and higher risk. So it depends is probably the answer. Okay, Google questionnaire number 6, is passive income taxed in Australia? Absolutely. All income is taxed in Australia. There's recently there's been a slight drop, but yeah, it's pretty high taxes, income tax in Australia, because I think there's 0, and then there's 37, and it goes 32, 37, and then 45% rates. Question number 7 from the Google questionnaire is, which real estate is best to invest in? Well, that depends on the investor, really. A lot of real estate people try to sell real estate, so they might say theirs is the best. But it really, what's best for that particular investor is the one that brings them the highest return at the risk that matches their risk capacity, and that also matches with their cash flows, so they don't have to keep tipping money in. So, which would be for the passive investor, we're talking about residential real estate close to major piece of infrastructure or places where people want to live. Google question number 8. How does property investing compare to other investment strategies? Well, it compares very well. Here's some of the better parts of the property investing is that the banks will give you most of the money. And for Australia, I would say it's pretty under control. And here's why. The banks are nothing but a whole bunch of property investments. It's a whole bunch of home loans. And the government guarantees the banks. So they're kind of working together to make sure this market is pretty stable. They don't want anything to interfere with the property market. Plus, there's a huge immigration rate in Australia. So that gives the residential real estate in Australia a pretty good advantage over the other strategies. However, that doesn't mean you should not diversify. Okay, Google question number 9. What is better, investing in commercial real estate or residential real estate? Difference between residential and commercial: residential, higher rental return, higher risk; residential, higher capital growth, it's tax shield, and lower returns, rental returns. The probably safer on the residential front, especially for earlier investors with little money. Big investors prefer commercial because you can make one big investment to cover a lot, like you can buy a shopping center, But yeah, so there's a bit of a difference there. That's the quick answer, but I've just done an entire episode in the last episode about that very topic. So skip down and check that one out, and I'll go into it in much more detail. Google question number 10. Can I buy an investment property if I don't have a job? Well, yes, of course you can, but you might have to pay cash to pay for it, because the difficulty you're going to have is getting the loan from the bank to buy the investment property. Because the loan wants to see, they're going to look at you, your risk, and they want to see your ability to pay that loan back. And if you don't have a job, you might have a tough time convincing them. Of course, unless you have other investments that have income coming in. Yeah, with no job and no other investments, it's going to be hard because this is a leveraged strategy. It's a leveraged investment strategy. And now to the very last question: what is the golden rule of property investment? Actually, there's 3. Location, location, location. We all know that. But why? Why is it location? Property is like gold. Gold is scarce. And that's what gives it its value. Everybody wants gold, and property is scarce. It's got its own unique address, every property. And the scarcity comes from its proximity to infrastructure where people want to live, like cities, like hospitals, like train stations, like the beach. And scarcity is what drives its value going upwards. So it's scarcity and its location. So that's the golden rule of property. You want to buy properties in the location with the most scarcity, either present or future. There were the questions from Google, okay? Hey, but look, if you have any questions, I can answer your questions too. I'm quite happy to. You can contact below from all the credits down below. There's a link down there. You can connect and book a call with me, ask in the comments, go to my Facebook, go to my Instagram. I'm on TikTok. Go to my TikTok and ask a question there. I'm everywhere. You can ask a question for me anywhere, and I promise you, I'll give you a great answer. I've been doing this stuff forever. I know everything. Just ask me a question, and I will promise you, I will help you. Listen to my other podcasts, but there's another one coming down the pipe Look forward to seeing you at the next podcast. And ciao for now. Hey, thanks for tuning in to The Passive Property Investor. If you enjoyed this episode, the best way to show your support is give a 5-star review on Apple Podcasts and Spotify. Make sure you subscribe to the YouTube so you don't miss a single episode. We're on all social media platforms, so feel free to connect with me there. And if you're having specific problems making your first investment or building your portfolio, maybe you don't know which location to invest in, how much you should invest, you're worried about who to trust, reach out for me down below. I will have the answers for you. Don't hesitate. See you on the next episode.